Hi, let's talk about Athira Pharma. It's one of the stocks that have currently dropped even to 35%. Huge drop, $7 drops to the $11 per share. It's a late stage, clinical stage biopharmaceutical company that focuses on developing small molecules to restore neural health and stop neurodegradation. The market cap based on yesterday's trading 678 million, which is pretty big. Consider that they are not selling anything currently. They have just let's look at the biopharma catalyst. They have this kind of drug pipeline. So there's Parkinson disease, dementia, ATH 1017, which is currently on this phase 2. Latest news shows that Washington State University to review claims of research misconduct, and yeah, the earnings are forecasted to decline by an average of 63% per year over the past for the next 3 years. Currently, the company is unprofitable, not forecasted to become profitable over the next 3 years. So as we can see, for example, opening the simple safe dividends, showing that the researches that they are currently making is just from the shareholders' money. So shares outstanding keep increasing, and total sales there's just no revenue and no earnings. So it's hard to calculate, for example, PE ratio and so on. The latest news were about board change. There was a general meeting, earnings updates that made the stock pretty much fall within. They had peak on the December last year, $34. So it's a highly volatile share price too. And yeah, for example, if we open up here, 34, and consider it's currently 67% down. So this means a volatile share price, and just for this trading date, 38% only today, 6 month, 63%. This is one of the things that every investor should look at as a potential risk. Whenever the company, you love the company, you love the product, still the share price could be volatile. So my recommendation is to not to invest more than 1% from your portfolio. So the less the better, the better the diversification, the less volatile portfolio you get. And if you are not risk tolerant, so it's better to buy, for example, low cost funds. They could, or for the industry. So if you see the industry is doing great, you could buy industry. You could watch some of the ETFs for the industry or for the global market and so on. Anyway, they entered, I think, IPO on the September last year, and there's currently not 1 year returns. So we have here 90 days, 30 days, 7 days. They're all negative. Okay, market is showing negative also 0.2, and industry minus 1.2. Long-term price volatility, so it can't evaluate because it should be 5-year volatility relative to market, but industry itself is less volatile than average market. And valuation, so there's based on simple Wall Street, we don't have any valuation, but if we open up tip ranks, $40 is sitting currently. So based on that, there's 250% upside currently. In 12-month forecast, looking the same, $40. Market Watch shows pretty similar numbers. In good scenarios 51, low scenarios 36, average $43 per share. And future growth is, yeah, as I said, the earnings are going deeper and deeper down, and this is actually the analyst forecast. So to the 2023 earnings would be, it's forecasted, minus 223 million. That's huge. And currently, where is the current situation? March 31st, minus 27 million. So no wonder that they are just printing money out. But of course, if they will get FDA approved for the drug, they will start selling and the price potentially could go up. Earnings per share growth is forecasted as well as to decline, as you can see here. And past performance, last year's earning growth decreased by 379%. So there's a big drop there, and currently they are unprofitable. Financial health side, so yeah, usually they're not having depth, so they're not taking depth to expand or research, put money on a product research and so on. The more better for the company would be just printing the shares out. So that is what many companies are doing, but it lowers your percentage in ownership of the company. So for example, if they had 10 million shares out last year and currently they have 20, that means if you own it 10% of the company, currently you're owning only 5%. So you're like half down. But balance sheet looks green. Cash and short-term investing, yeah, actually the cash level is one of the important things, yeah. So they have cash, 300 million. This is actually very, very good. But the money is also, it could run out within the time if they are not gonna raise the investments. But if they just printing too much shares out, it could affect negatively to the share price, as you can see here. So this is actually the not very good situation for the shareholders. And yeah, long term and other assets 58 million, physical assets 4 million, receivables 2.9 million. They're not paying dividends and insider volumes. So do we have here the insiders? Yeah, only buys. So there's two companies that have been buying. Latest January 25, 22nd September, and yeah, in September at the price of $17. Ownership breakdown: institutions holding 49%, general public 24%, hedge funds 12%, VCP firms 9%, and insiders less than 5%. Top shareholders, so yeah, we see here mostly green, so companies, institutions are adding. We see here Vanguard Group adding 20%, last reporting holding date 31st of March. BlackRock is adding as well. And yeah, only on the top, RTW investments decreasing only 1%, but also yeah, last reporting holding date 31st of March. As we can see here, the midterm, this is going down. So we see these lines here, here, and here. This, yeah, and actually it follows it. So it drops from the $18 per share to, yeah, 11. So it actually follows this line. So whenever the research stocks or something like happens, it could be a very volatile share price. So be aware of that. And I'm not dramatizing, doing drama of it or anything like. I don't have short interest in this company. I'm not sitting in long, and yeah, just doing my research in my perspective, how I view the company. The shares outstanding keep increasing. No totals, no in sales, nothing. So that's how this could be affecting on the long-term price. It's very interesting. But this is actually one of the things that usually this kind of companies are mostly the same. Investing.com summary the stock for long-term investors as a sell. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.